Good afternoon, and thank you for joining us today. My name is David Talbot. I'm Managing Director, Head of Research here at Red Cloud Securities, and I'm delighted to host another Red Cloud webinar on uranium today. We are going to hear from Energy Fuels President and CEO, Mark Chalmers. Now, during today's webinar, he will provide an overview and outlook, and then we'll get to your questions. You can type your questions into the chat box at any time. We'll get to as many as we can. But before we kick things off, first, we need to discuss the fine print. During this webinar, forward-looking statements may be made, so I direct listeners to forward-looking statements outlined on page 2 of the Energy Fuels corporate presentation. That can be found at the company's website, energyfuels.com. For Red Cloud Securities, I'd highlight this webinar is for information purposes only. It should not be considered a solicitation or recommendation to buy or sell securities. And we note this call does not consider the particular situation or individual needs of individual investors. So participants should rely on their own investigation and seek their own professional advice before investing. You can see our most recent research located on the Red Cloud website for specific disclosures on energy fuels. So with that, I now turn it over to Mark to update our audience on the company. So take it away, Mark.
Thank you, Dave. And it's always my pleasure to participate in things like this with Red Cloud and also tell our story, which is a remarkable story. And it's different than really any company story you'll hear of, because we have a long history of producing uranium and vanadium. And some of you may know that I've been doing uranium business for well over 40 years, but we've also bolted on the recovery, the mining and recovery of rare earth elements. So it really is truly a energy transition story on steroids. Now, this first picture on the cover slide is a picture of a White Mesa mill, which is located in southern Utah, near Blanding, and that is the hub of our critical mineral infrastructure. And I'll talk more about that in the next few slides. As Dave pointed out, I may be making some forward-looking statements. Those are included in this presentation, and this presentation is also on our website and updated pretty much monthly. Really, Energy Fuels, as I said, there really is no other story like Energy Fuels. We are and have been for a number of years a leading producer of uranium and vanadium in the United States, and then we bolted on the rare earth elements. And all these are required for creating a cleaner, a better world when it comes to reducing carbon emissions and improving electrification. You know, the periodic table, now some of you may not have seen this for a few years, but particularly you definitely saw it in chemistry class back when you were in high school or maybe in college. And really what Energy Fuels is focused on, as I said, the uranium, the rare earths, vanadium, and radium, potentially used for cancer therapies. But when you look at it, you can see the uranium in sort of the kind of the yellowish kind of color at the bottom of the table. And as I said, we've been doing that for decades. I've been doing that for many decades. And then the vanadium up a sort of gray box up higher. And then you see these other things that are the rare earth elements, including radium, which is really part of the more related to the uranium mineralogy. But you look at the rare earths that you hear a lot about, and a lot of these people really didn't care much about if you go back even a decade or two, but now they're front and center. And front and center, particularly for improvements in electrifications like the neodymium, the praseodymium used in the high efficiency electric motors and high efficiency magnets, and the terbium and dysprosium that give better heat characteristics to those magnets. So again, when you look at the periodic table, you look at a number of these emerging elements, and we've seen it in lithium, we've seen it in cobalt and graphite. Many of these now are getting much greater attention than they would have in the past. So our products, whether it's nuclear fuel assemblies, vanadium flow batteries, permanent electric motors using these rare earth elements, wind turbines, or even for military purposes, that is what our company does. And this is where, again, a key differentiator, because typically you would invest in a uranium-only company, or you would invest in a rare earth company, or perhaps even a vanadium only company. So really, as I said, you get all those in one investment with Energy Fuels. So when you look at our products, I mean, uranium used for baseload energy, for nuclear energy, that provides 50% of our carbon-free electricity in the United States of America. And then you look at the rare earth elements, and I've talked about these for EVs, wind generation, and other high-tech appliances. The vanadium is typically used mainly for high-strength steel. A little bit of vanadium makes the steel twice as strong, but also getting increasing attention as for large-scale grid storage, battery storage for renewable storage. Medical isotopes, I mentioned the radium, and we're looking at, and this is much less developed than some of the other parts of our business plan, but when we're processing uranium and vanadium and rare earths, we solubilize a number of isotopes that could potentially be used for some emerging cancer therapies and treatments being approved by the FDA. So it's a very exciting area for us, and it's, again, something that no one else in the United States or even Canada is pursuing at this time like we are. And lastly, we have, in terms of our business strategies, we have a long history of recycling mildly radioactive products with natural uranium, and that is the reason the White Mesa Mill exists today. We pride ourselves on a very strong balance sheet, and when you look at our fact that we're debt-free and that we have a strong balance sheet, and we also closed the sale in February of the Alta Mesa project in Texas for $120 million, and not reflected in that $117 million of working capital. So again, let's talk mainly about our long-term history and our core business being uranium. We have the White Mesa Mill that I showed at the beginning slide in Utah. That's the only operable conventional uranium vanadium mill in the United States, but it also has the ability to recover rare earths and recycle. It has produced a lot of uranium. It's produced nearly 40 million pounds of uranium and over 50 million pounds of vanadium over its history. So we know how to produce uranium vanadium at that site, and we're also producing the most advanced rare earth product in the United States right now at the mill as we speak. The Pinyon Plain mine is in pre-production. We're doing some production readiness work right now. We got people underground there. It is the highest grade underground mine in the United States, and probably the lowest cost uranium mine in the United States. We have the Nichols Ranch ISR, in situ recovery facility in Wyoming, which is on standby. And we also have a number of other conventional mines in the Four Corners region, including Wyoming. And one of them is called the LaSalle Complex. And this was a complex that was previously owned by Union Carbide. And it is a uranium vanadium complex comprising of about 4 or 5 fully permitted operable mines. So last year was a very busy year for us. We started signing up new sales contracts that had delivery schedules from 2023 to 2030. This quarter, we're planning to start filling some of those contracts. And there are 3 contracts with 2 utilities, and it's certainly become a much more active area with the nuclear utilities going out and securing long-term contracts, and we've been able to benefit from those. The fact that we were able to sign those contracts puts us in a position to open up 1 or 2 mines this year or later next year. And so we've got people on the ground at those sites getting ready to go back into commercial new production literally by the end of this year. We also were able to sell some uranium to the Department of Energy. We sold 300,000 pounds in January of 2023, and we secured around $61.57 a pound. That was the first time the U.S. government has been procuring uranium in probably 50 years from U.S. producers. When you look at us, we're mainly known as uranium producer, and you look at sort of the companies that are based in the United States and Canada. We're right in the middle of the pack. this is outdated a little bit. Our current market cap is more like about 868, 70 million right now. But the thing I want to point out here, that even though we're in the middle of the pack as a uranium producer, and we have a history of being the largest producer for the last several years, and actually in the United States, we have been second largest producer of uranium in the United States over the last 15 years after Cameco. So, but look at our working capital, very strong, zero debt. We have uranium inventories, and all of us tick the box for uranium. But when you look at others, no one is advancing the rare earth business on that list. No one has the ability to produce vanadium. No one is also advancing potentially the medical isotope business for the cancer therapies, and none of them have the ability to recycle like energy fuels. So just remember, we get valued as a uranium company, but if you want some diversification and upside that comes with those other ticks that others don't have, we're a very unique investment. So let's talk a little about the rare earths. And the rare earths, many people question why we're getting into the rare earths. And the reason we got into the rare earth business is uranium and rare earths fit perfectly together. The best feeds of rare earth contain uranium, and that is a problem for just about everyone out there around the world. And it is not a problem for us. So certain rare earth feed streams that others cannot process because they can't handle the uranium or recover the uranium or deal with the tailings is not a problem for Energy Fuels. So we are utilizing the White Mesa Mill to be able to handle and recover the uranium and the thorium and the other isotopes, and be able to create and utilize that facility to produce rare earth oxides in a manner that nobody else has done in the Western world. We're basically replicating what the Chinese are doing with the treatment of monazite. And the difference is we're doing at world standards in the United States, the very highest standards possible, which gives us a unique, significant advantage. Now, this slide should shock people, because what it shows is a global rare earth market from mining all the way through to magnet manufacturing. And the red on this graphic is what we're dependent on China for. So when you look at even mining, there's just a small percentage of mining done outside of China, and the rest is done in China. You look at separation, refining, and the magnet making. This should scare the crap out of people in the fact we are overly dependent on rare earths from China, just like we're overly dependent on nuclear fuel products like uranium conversion and enrichment with the Russians. So when you look at this, this is where, while we're recovering the uranium, producing uranium from our uranium mines, our uranium vanadium mines, we'll also recover uranium and rare earths at the same time. So if you look at our progress over the last, coming up on 3 years, we announced April 2020, we're getting into the rare earth business. We began processing monazite in July of 2021. We began piloting of separation for the NdPr oxide, which are the element used for these high efficiency magnets, as I mentioned, and motors. We started making high purity carbonate. We were shipping that to Estonia. And the carbonate we make is between 32 to 34% NdPr, very pure, shipping it to Neo Performance Material. We closed the acquisition on a very large land position and project in Brazil called Bahia, which we're very excited about. And right now we're in the process of building out what we call phase 1 separations to be able to separate rare earth products at a level and at an advancement greater than anybody else in all the Americas. And we're advancing that, and we have the potential, given adequate feeds of monazite, by the end of this year or early next year, to be recovering enough NdPr for up to 1 million electric vehicles. At the same time, we are building out separation, this phase 1 separation at the White Mesa Mill. We are currently engineering phase 2, which is about 3 times larger than phase 1 and could make us world material outside of China. Actually, even phase 1 makes us world material outside of China, but phase 2 makes us world material and having capabilities the likes of Linus's and even MP materials. So, but then lastly, we are also at the end of that looking at phase 3, which would be for separation of the heavies. So when you look at our company in the United States of America with the relationships we have a relationship with Chemours. We get our monazite currently from Chemours in Florida and Georgia. We've secured the Bahia project. We're looking at other sources of monazite around the world. And I believe that by the end of this year, we're going to have other sources of material coming to the White Mesa Mill, because a number of these companies are not wanting to deal directly with China for obvious reasons and would like to have diversification in a place like the United States. So when you look at, the mining and beneficiation today, the securing of the natural monazite ores, we have the ability to do the cracking and leaching and making a rare earth carbonate. We ship that currently to Estonia, but then we're moving forward with the separation to make the separated oxides, where we'll make this NdPr oxide, and we'll also make an SM plus concentrate, which contains the heavies. And then as we move forward, we also will be looking at metal making and alloying in due course, but we're marching down this path of full integration. But remember the graph I showed you as we trade as a uranium company that has more assets and more production capacity than anyone in the United States. We're valued as a uranium company, and we have these exciting opportunities on the rare earth front. So the Bahia project I mentioned that we closed on just recently is a heavy mineral sand deposit. We currently have secured and closed on nearly 60 square miles of a land position there. We've done phase 1 exploration drilling. We purchased a exploration drill rig, a sonic drill rig. We're getting close to starting phase 2. It was originally only drilled to about 6 meter depth, and we now have the capability to drill to like 25 to 50 meters with this sonic drill rig. So we're very excited about this. It has the potential of providing between 3 to 10,000 tons of monazite per year to feed our White Mesa Mill. And we would continue to complement that with feed from people like Chemours and other projects in due course. So just some pictures. A lot of people in the rare earth business declare victory when they have recovered rare earth products in a beaker. And to the upper left-hand corner, that's concentrate carbonate going to Estonia for separation, and we ship it out in the truckloads. So, we're very excited at the speed and pace we've been able to advance our activities. In the lower right-hand corner, I want to say that is the separation pilot plant we have at the mill that operates right now, and it has 72 mixer settlers, and we are piloting our phase 1 separation capabilities that will be commercial scale right now, and we are building the phase 1 right now. So no other company that I know of really has the ability to do their piloting and test work on the site that then they're going to build commercial facilities. That is a huge differentiator because we can do it on the fly, lower cost, with people that are going to actually pilot it and build it all at the same time. So why would Energy Fuels be able to be successful in the rare earth business when a lot of companies have struggled technically? Well, number one, we can deal with the radionuclides without a problem. We have the infrastructure to handle the radioisotopes and nuclides. We have the ability to recover the uranium. It is a monazite is very high value supply source. It is mined in the United States and around the world. It was considered a problem a few years ago, and now it's considered the new gold. It is straightforward to process if you can handle the radionuclides. The fact that we have existing infrastructure, people on the ground, and 5,500 private acres, it is low cost from a capital cost and operating cost perspective. We have a long history of dealing with solvent extraction. This is not new to us. Our people are very capable and confident with their abilities and their experience with solvent extraction. And solvent extraction is a proven technology. And Utah, the state of Utah, is a great place to do business. So now, where does Energy Fuels fit in with the publicly traded companies that are in the rare earth business? Look at this, right in the middle of the pack again. There's about 5 sort of major players in that, from MP, Lynas, Iluka is getting into the business. They're heavy mineral sands producer, Energy Fuels, and Neo. But I want to say, again, state, we're in the middle of the pack of the rare earth producers, but we're valued as a uranium company. So I think this is a huge opportunity to unlock more value to our shareholders than other companies, because we're more diversified and we're making rapid advancement in rare earths, and we have this long history of producing uranium. I have been producing uranium around the world, as I said, I think earlier, for over 40 years. We know how to produce uranium. We know how to produce vanadium. And folks, we know how to produce these rare earth elements as we advance them quickly. So let's talk just real quickly about these other legs to our stool, which is vanadium. And many of you, or some of you, will certainly be familiar with the vanadium space. Vanadium is also a critical element, and we have the only conventional vanadium processing facility in North America. And we have a number of vanadium uranium mines that half the value is uranium, half is vanadium. And we have the ability to go back in production at any time quite quickly. We're the largest producer of vanadium in the United States in 2019. There are some recyclers of vanadium in the United States, but primary vanadium production, we have the best of Union Carbide's assets as a company. And I mentioned the medical isotopes, that when we're processing uranium and the rare earths, we solubilize a number of isotopes, and we're looking at recovering those for these targeted alpha therapies that are out there being approved by the FDA. It's a very exciting area. And some people have told us it's not, they're not looking at these targeted alpha therapies to treat cancer, it's to cure cancer. So I know that's a big statement, but it is an exciting other option that could be evolving with Energy Fuels that, again, I don't know anyone else that is doing this at this time. So when you look at our company and the evolution of our company and the recycling that we've done, all fits perfectly into the whole world of ESG. We've also picked up our game when it comes to the work we're doing in the communities. And so, you know, everything we do is focused on ESG. And you look at what uranium can do to reduce carbon emissions. Number one, it's remarkable. There's really no zero carbon plan out there that can get there without nuclear energy. You look at the rare earths to improve electrification, and you look at this neodymium, praseodymium, dysprosium, terbium, what that can do for the most efficient electric vehicles and renewable energy generation, as well as national defense and batteries, fits perfectly into ESG. The vanadium used for high strength steel, but also for potential base load renewable energy storage with batteries. The isotopes, potentially saving people's lives with sort of leading edge cancer treatments, could be remarkable outcome for our shareholders and for people in general that have cancer. The recycling, we've been recycling both natural uranium products and some products that contain vanadium for several decades. And we've recycled enough uranium that if you compared to energy, of what we've recycled uranium-wise, it would be a coal train from LA to New York and almost back to LA on the equivalent amount of energy as a coal train and what we've recycled. So it's a really remarkable story in that regard and how it fits with ESG. On the community outreach, we've made a long-term commitment of improving the quality of life for people in San Juan County, which is the county where the White Mesa Mill is. It's one of the poorest counties. It is the poorest county in Utah, one of the poorest in the entire United States. About 30% of the people live below the poverty level. About 50% of the people are indigenous. I was there for the last 3 days giving tours to a number of groups of the mill. And we set up a foundation called the San Juan County Clean Energy Foundation. We put an initial deposit of $1 million into that foundation, and we've committed 1% of the annual revenues from the mill to replenish what we distribute out of the foundation. We're very excited about that. We are looking at a number of programs that deal with education, environment, health, wellness, economic advancement, and also Native American priorities. So I could not be prouder of the work we're doing on the ESG fronts and with the local communities at Energy Fuels. So our financials at year end, I talked about very strong balance sheet, and this is actually very conservative. We had $117 million in working capital at the end of the year of 2022, a significant amount of cash, marketable securities, in inventories, and zero debt. But those inventories were basically valued on our book value of the uranium and vanadium we have at book value. Since that time, we closed on the Alta Mesa sale for $120 million. That was $60 million of cash that we received, and we also have a loan outstanding for $60 million, which is a convertible note. Puts us very strong position on that transaction. We also sold $18.5 million to the reserve, as I mentioned earlier, with the Department of Energy. And so we're in very strong position. But also, when you look at increasing the value of what we carry our uranium on the books at, around less than $30 a pound to current prices, and same thing on vanadium, you can basically, at current market values, you can add about 25 million in current finished goods inventory of our products onto these numbers. So again, folks, I think we have the strongest balance sheet of anyone in the space in North America. Outside, probably only outside of Cameco would be stronger, but they're much bigger companies. So look, for guidance in 2023, we plan to sell around 560,000 pounds of uranium at a weighted price of between $58 and $60 per pound. So I believe that would be greater than probably most, if not all, our peers. We're going to continue to put at least one project into production in short order because we have these long-term contracts. We're looking at significant additional long-term uranium agreements, but we're looking at those at higher pricing because the cost of everything's going up. We're not planning right now at the moment to actually produce any new uranium or vanadium this year because we're trying to get the rare earth process up and running with this phase one. We are processing, though, as I said, some of the rare earth monazite as we speak, and we'll continue to build out this phase one rare earth circuit for around $25 million, which is remarkably low cost compared to what others would cost to do that. We are seeking other rare earth offtakes, and we're advancing the Bahia project towards a 43101 technical report. So that is really the story behind Energy Fuels. No other investment like Energy Fuels. Uranium, rare earths, vanadium, medical isotopes, recycling, experienced management team, infrastructure, zero debt, and we are doers and we move forward aggressively, but not recklessly, by keeping a strong financial position. I'm open for questions that any of you may have.
Great. Thank you very much, Mark. Great informative presentation as always. So now we're going to kick off the Q&A portion of the webinar. We already have a few questions, but a reminder to people that they can, anybody on the line, you can type your questions into the chat box at any time. So Mark, let's start with the topic of ESG. Has that really changed the game here? You know, essentially taken the uranium out of the doghouse, if you will, and maybe one of the reasons why both government parties seem to be moving in the right direction with nuclear. And what has ESG really meant for investors?
Well, I think that people are realizing more now than they ever have that uranium is a green element. You know, the ability to reduce carbon emissions, the need for baseload energy 24/7. You know, I think that, and I think a lot of the younger people are realizing the power of nuclear power. And when you look at people like Bill Gates and others, you know, the Elon Musk and everything, and the importance they place on nuclear energy, I think it is resonating with a lot of people, and particularly need for electric vehicles. Now, from an ESG perspective, you know, what does that mean to investors? I think it means that everybody is nowadays, everybody has to lift their game up here. Everybody has to lift their game up and have to do more. And I'll be completely frank. If you look at when the White Mesa Mill was built in the 1980s, you know, that was a long time ago. And people did not focus and spend the time on community consultation back then like they do now. So it's becoming something you have to do, and you can't fake it. You've got to do it. You got to do it right. And our company is very focused on doing it right. But we're also doing it in a way so that the local communities also get to benefit more than perhaps they did in the past. And that's more important than it's ever been.
And do you think that investors are really focused in on this ESG? You know, we have so many consultants out there ranking companies and ranking investments these days.
You know, I think some of the larger investment houses definitely look at that, and I think that everyone should consider that. I mean, I think that, you know, you've got this responsibility, particularly as public companies, to operate the highest standards possible. And I think that when you look at the delta between the standards that are required in Canada, the United States, and places like Australia, and some of these lesser developed countries, I think you definitely have to take that into consideration if you're going to be a responsible investor.
Perfect. Okay. Now, Energy Fuels does have a long history of producing uranium and vanadium, but really rare earth elements seems to be taking more of a foothold and I'd say management attention. You mentioned that you're not planning on producing any uranium this year to really focus on the rare earths. Would you still consider uranium as being your core business?
It is our core business. As I've said, I've been doing uranium for coming up 47 years this year. But they, as I said, they fit perfectly together, that when we're producing rare earths, we're also producing uranium. The uranium business, Energy Fuels in the United States, we can be the big fish in the pond when it comes to uranium production in the United States. But having said that, we will never be top 1, 2, or 3, 4 producers of uranium globally. Okay, we'll never be able to achieve that. And it's just the nature of our deposits, but a long history in the United States of producing reliably, filling contracts, whatnot. We'll never be a globally significant, we'll be US significant. Rare earths, we believe we will be globally significant in the rare earth space while producing uranium. We are going for the biggest bang for the buck for our shareholders. So we think the combination of the two is really exceptional. And but anyone who thinks that I'm going to get out of the uranium business, and Dave, you've been to a number of the sites I've operated around the world, it's not going to happen.
Right. Okay. Now, with uranium, vanadium, now rare earths, you've got medical isotopes, you had pond water a couple of years ago. Do you really foresee a move into any further potential revenue streams? Are there other opportunities that you're not even talking about much anymore or yet?
Well, look, we want to take things a step at a time. So I try to frame them, the uranium, the vanadium, we've been doing that a long time. Coming up on 3 years ago, we got into the rare earths and we made the carbonate. We shipped it to Estonia. We secured Bahia. The radioisotopes, frankly, is a very exciting area because, basically the products that we would be producing would be sold on to pharmaceutical companies. And let me tell you that the margins in that kind of a space are pretty remarkable. There really isn't anything we're not telling investors beyond that at this point in time. We still do this recycling of natural uranium products, but again, I want to make sure that our team stays focused on the big parts of our strategy, and then the further out they get, have lesser focus. I want people to understand that we're very focused on delivering the things that we know we can do, in a step-by-step basis.
Okay. Now, we have seen some companies over the past year and into this year do a lot of contracting, Energy Fuels included. Now, a lot of people, I think, when they're looking at supporting uranium prices, they look to Sprott, Sprott Physical Uranium Trust. Do you believe that really the contracting is one of the keys to supporting uranium pricing going forward? Real demand?
Well, I think I think that the fact that Sprott got in the space, I think it certainly put a spotlight on it, that they're buying uranium, and really when you look at the uranium that's being bought, I mean, right now at $55 a pound, whatever it is, it's hard to replace a pound of uranium for $55 a pound. I think it's put the spotlight on the market that the prices still need to go up. And in our case, we signed these contracts. We said that, look, in this year, we're probably around $60 on a weighted basis. We can make money on that for a number of reasons, because we have the alternate feed where we get uranium, small quantities, but very low cost. We had inventory on the books for less than $30 a pound, and we've got some low cost uranium production coming out of the first project or two. But look, I don't know if I answered your question, Dave, but I think that I think it was very helpful for Sprott to get in the market and start buying up some of this uranium, and I think that the realization is now you need higher prices to truly replace a pound of uranium.
Mm-hmm. And we did see the U.S. government buy. They were buying in the $60 range from some companies there. Did the U.S. government, when they bought uranium earlier this year for that uranium reserve, they spent about $68 million from 5 different companies. Do you think that's enough support? Do you think they should increase that going forward? Will they increase that going forward?
I think they should increase it going forward. That our company was very involved with the Section 232 and the uranium reserve, probably the most front and center company in the United States in that regard. And this first purchase was just sort of we hope the beginning of a bigger picture, longer term, more reliable support from the U.S. government. And the Uranium Producers of America is currently working to make it a multi-year commitment by the government at larger quantum. So I think the original appropriations for this first part of the reserve was around $75 million. I think they're asking for $150 million, which it was considered at a few years ago, over perhaps a decade or something. The U.S. government needs to get back in the game, supporting all steps in the nuclear fuel cycle.
Okay, now you just bought a rare earth project in Brazil. So how are you thinking about geopolitical risk of BRICS now that Brazil really seems to be growing in alignment with Russia, India, China, South Africa?
Well, look, you got to look at geopolitical risk no matter where you're doing business, and don't fool yourself. There's significant geopolitical risk in Canada, the United States, and Australia, and particularly in the resource industry with all companies. We see Brazil as a favorable place to do business in the scheme of the world. And there's a number of companies, significant companies in Brazil doing business. You got Vale, you've got Mosaic, another of other companies. You got Tronox in Brazil. So we see it as relatively favorable. But this is a new world we live in when it comes to geopolitical risk. So we see Brazil as being an important acquisition, but it's going to be just part of the puzzle when it comes to feed of rare earth products to the White Mesa Mill.
Now, regarding uranium supply risk, do you think there's a desire by either the U.S. government or the uranium industry in the U.S. to stop the flow of Russian uranium into the U.S.? And might the Russians do it anyways? Not just the uranium, but of course the enrichment.
Yeah. Look, I think the realization is we became overly dependent on Russia for nuclear fuel products, just as we are overly dependent on China for a number of the products, including rare earths. I think the realization is that we need to come up with a plan that is transitional. And look, we don't want to do something that's going to shut down nuclear reactors as a company. We want to be part of the solution to help with that transition. I think that, when you look at ESG and you look at if you're a nuclear utility and you're importing a lot of your fuel for your nuclear reactors from Russia, it's not a very good look. And we want to be part of the solution to help wean off of some of these countries that we become overly dependent on. And Dave, you'll know that in the early days of Section 232, that was exactly what we were advocating. We needed to wean off. And so we were kind of ahead of the curve. And we didn't quite get there. We got there partially with the uranium reserve. But we want to be part of the solution. But we, at the same time, realize we want to keep reactors going.
Yeah, I don't think anybody actually realized how right you were at the time. So
yeah, we'll take that as a compliment. A lot of people didn't think we were very right at the time. We took a lot of heat on that. But I think it kind of shows, I think, a company, we're forward thinkers. And after, the decades and decades we've been in the business, we're not thinking about the share price today or tomorrow. We're not thinking of where we're driving the company today or tomorrow. We're looking out, a few years in advance. And that's why we do and operate the way we do.
Mm-hmm. You're looking at growth, right? So, when do you, speaking of that growth, when do you anticipate your new high-grade Pinyon Plain mine to enter production? Is this something that might be a little bit dependent on resuming production from other mines since they're all feeding the same mill?
Yeah. Well, look, right now we've got people underground at Pinyon Plain doing development work, getting the project ready to go back into uranium production. We haven't given a date exactly when that will be. We've also got people in the LaSalle complex doing work at LaSalle and the Beaver Shaft. We've also been doing work at Whirlwind. And these are our uranium, vanadium mines. So we have, like 4 or 5 mines, conventional mines at this point in time, that are ready basically to go in production depending on which one we decide to start up. So we're not just ready in a year. If I got on the phone, I could tell people to mine uranium right now, and we could be mining uranium this afternoon.
Right. Okay. Now, the EPA has put money aside to clean up some of the legacy uranium mines in the Four Corners states. You have a plant that can certainly help with that task. Does the U.S. government have a clear timeline to release some of the funds for the Navajo Nation historic uranium cleanup?
That's a tough subject for us because we've been advocating that we could clean up abandoned uranium mines literally today as well. We have all the licenses in place. We have the facility. We can take that low-grade ore right now. The government continues to study that and study that and study that. and in some cases have really kind of ignored our ability to help right now. I don't think that'll be possible forever because we are such a great outcome for the cleanup. So yeah, I mean, when are they going to release? They're releasing money now to dig up some of that material. They're looking at placing some of that material in New Mexico, and where they were planning to place it in New Mexico near Grants, a lot of the people don't want it there. And meanwhile, we've got a facility that's completely permitted, ready to take material right now. Last couple of years, we took around 60,000 tons of low-grade ore from the Mount Taylor mine in New Mexico, and we have it sitting at the mill as we speak. And we didn't require any approvals or permits to do that. And we can recover the uranium and put it in our tailings facility. So we're still actively interested in participating there. And frankly, it's a no-brainer. But we're ready to help where we can.
Great. Okay. Let's switch gears a little bit to rare earths here. And now, maybe could you provide a little bit of color on the difficulty that you've had procuring rare earth element bearing monazite for the White Mesa mill? You know, I guess besides your own Brazilian acquisition, do you see improvement in finding more American feed material?
Yeah, I mean, when we got into the rare earth business, and we did a lot of work with Neo and Constantine Karyanopoulos, the monazite was a waste product that in many cases had zero value, zero. It was radioactive. Nobody cared about it. Nobody wanted it. And then the world woke up to rare earths, and the price went from almost nothing to thousands of dollars per ton because of the content of the rare earths. The only group that was buying the rare earths were the Chinese. Now, the Chinese were securing monazite 3-4 years ago for under $1,000 a ton. And now they're prepared to pay thousands and thousands of dollars per ton, which tells me one thing. They want to take control of the market like they do on everything else. That increase in price has complicated securing monazite. But what hasn't complicated our strategy is the fact a number of companies that are faced with ESG and want to diversify from China recognize what we bring to the table and at the standards that we operate at. And many of those companies are coming back and talking to us right now. And we think that that's going to be a winning strategy for us over time. But that increase in the value of monazite is what complicated it. And so we decided that we've got the relationship with Chemours. We were going to secure a project in Brazil that was our own molecules in the ground. We're talking to a number of players right now, and many of them are keenly interested to do business with us. This is not I believe me, we need China to produce rare earths. We need them to produce rare earths because there are not enough facilities to produce rare earths for the electric vehicles right now without China. So this is not a China slide. This is just a reality that we are planning to provide a service that's alternative to China in a responsible way with parties that want to deal with a company based in the United States. So, but we have multiple conversations going right now. And what we offer, we believe, is quite compelling for a lot of reasons.
Now, how should investors and analysts think about or model the margin on your rare earth production? You know, particularly with the close of your Brazilian project now.
Yeah, look at. I think the way we should model it is that it is the lowest capital operating cost. We believe certainly in Americas. We need to show the market that we've got significant commercial quantities of monazite coming to the mill in the next, within the next year or so. And what it will be ultimately will be a blended price of prices that we secure monazite from Chemours, our own projects, and what we purchase on the open market. It'll be a blended price. But I can tell you that the economics are very compelling, as we build that story. I understand what's been frustrating for people to say, well, how come they can't get the monazite? And I told you, the fact that the price went up was the biggest impediment, and that's what we're working through. But when we can build out infrastructure that is, say, a quarter of the value from a capital cost perspective, because of the existing infrastructure and the people we have on the site and knowledgeable solvent extraction, is very compelling. So I really look forward to the day I can give more optics on the economics. But we build our plans on the fact we were not going to need subsidies. Not that they wouldn't be appreciated if they're the right subsidies, but we're building our market on the view that we can do this on our own accord, with our own balance sheet, with our own people, with a mix of feed coming from 3-4 sources that comes with a blended price that gives us a very robust margin.
Right. Now, you're currently processing monazite. You're creating mixed rare earth carbonates. At what stage are the technical studies for building a rare earth oxide separation plant? And will that circuit be able to separate terbium, dysprosium? What else is it looking at?
Well, our phase 1 is to make a separated NdPr oxide, okay? And that's about 70% of the value chain of the rare earth elements in a ton of monazite. Because we have piloted, we've got the pilot plant that I had a picture of in my presentation. We've ran that for the last few years. We've also done some commercial separations for the lanthanum and the cerium for on making the carbonate. That first phase of separation purifies, particularly the radionuclides, out of the carbonate. The technical aspects of the separation of the NdPr oxides and the SM+, we feel we have a very strong handle on it with the people that we have in place, and the piloting we've done, the commercial separation we've done, lanthanum, cerium already, and with some support from our friends at NEO. So we don't see any real unknowns from a technical risk perspective. We think we're better placed than others because, as I said, we can do all our test work at the site, and the people that do the test work go out in the plant area. It's fully integrated in terms of the expertise. We think it's a remarkable, position we're in, capitalize on that, reduce technical risk.
Mm-hmm. Okay. Now, Saskatchewan, it's the largest uranium mining jurisdiction in North America. Advanced in rare earth mineral processing as well, led by Saskatchewan Research Council. Do you have any appetite to expand your rare earth mineral processing business into Saskatchewan at all in the near future? And I guess I could even
look. And we have regular dialogue with the Saskatchewan Research Council. There are deposits in Saskatchewan, other parts of Canada that could be feed sources for us. We've talked to a number of them. I'm not going to say no. I'll say we'll consider where we need to go. Saskatchewan Research Council is looking at a much more modest scale than we are. But look, the reality is this: if we're going to achieve our electrification, decarbonization goals, we need everybody that's in the space to be successful, or everybody that's got real deposits and real, expertise and technology. So we're supportive of multiple companies getting in, creating value, creating molecules to get to the goal of, zero carbon emissions as quick as possible. So, and that includes the Chinese. We support responsible development, and we also consider working together a very important element with other parties in the space.
Great. Okay, so Mark, we're approaching the top of the hour here, so I think we need to wrap things up. Maybe just a final question here. You do hold a significant cash balance. How are you managing your concentration risk in light of the recent banking volatility? And are you heavily exposed to any specific banks out there?
Look, we always spread stuff around. The biggest volatility we've had in our investments have really been our investments related to the uranium space directly, which we still, we're pretty used to that. But no, we have our funds split up between, a couple, and I don't want to get into banking details, but, a couple significant, Wells Fargo and RBC, and then some of our investments in like Consolidated Uranium. We've got investments with Encore. So we've got it split up in different places. Some have higher volatility than others, but we're a strong believer of diversification, and that's what investment in Energy Fuels is more diversification than you'll probably get from any others in our class.
Great. Okay. Mark Chalmers, President and CEO of Energy Fuels. Thank you for speaking to us today.
Always a pleasure.
Great. Thank you, everybody else, for tuning in. A reminder, the Red Cloud Securities will be back Monday afternoon. Tim is going to sit down with Moss Gold. So that's April 17th at 2 p.m. Eastern. So hope to see you then. Have a great day, everyone. Thank you very much.